Hello and welcome back. Today we're going to be going over some of the hottest news in crypto, and if you haven't already, do subscribe, drop a comment, and hit the bell and get your latest news in crypto. Arthur Hayes, predicts that Ethereum is going to reach $5,000 after the merge if the Fed pivots, of course. Now, Ethereum to 5,000. So there was a post on August the 5th, and Hayes said that if the Fed's pivot towards supporting growth rather than actually fighting that inflation, that would lead to an expansion in quantity, a situation where the Feds would have to print more money to support that economy, which honestly is more likely going to happen that way. Now, in this scenario, that merge is going to happen in September, apparently, and he believes that the digital asset would be able to reach around 5,000 as it would become a deflationary asset in high demand. So this post, it was stated that the rate in which Ethereum is issued per year would be reduced by around 90% under the new POS model. Now, Ethereum taken out of circulation will only increase as the network grows in popularity, and all of these factors actually together should still drive the price of Ethereum up exponentially. Now, where the Feds actually backtrack on the decision to support that growth, that merge would still be able to push Ethereum's price around $3,500. Now, according to Hayes, the merge is expected to drive a triple halving event for Ethereum since Bitcoin's price has always reacted positively to its halving. Some other predictions that are done here, they continue that if Ethereum's merge actually fails or is suspended and the Feds actually pivots its policies, there would not be any adverse effect on the asset price. But several people would actually be left disappointed by the failed promises. Now, he explained that how he arrived at his $1,600 prediction, said that Ethereum would have gone up by around 1.72% without the excitement of that merge between the 17th of June and July 26th. So a merge failure would actually drop that price to around $1,000, but this would still be more liquidity from the Fed pivot. So he's expecting the Ethereum to eventually go up as he did in March of 2020 and 2021, and the Fed's expanded money supply once more, that is. Now, let's go into some other news. Now, that Glassnode report actually had shown that previous Bitcoin surge was a bull trap. I think we all understood that recently, right? So some leading cryptocurrencies like Bitcoin and Ethereum actually shown that bullish price trend. Some are thinking that reversal in value to the US president and the Fed's recent outplay of events, but that Glassnode has a contrary opinion, and the blockchain analytics believes that the fundamental change in price value is actually not real, but a bull trap. Now, after passing through some months of crypto winter, it actually made a progressive upward move, and that market cap hit over $24,000. Now, despite the past days of the price surge, Bitcoin actually turned up an upward climb today, the August the 3rd, well, the other day. After that, it token crawled down to around $2,300. Now, the analytics from the used of the case network fees to actually prove that position. So typically there are a drastic increase or increases as more users actually engage in the most influential blockchain. That was actually evidenced by bull markets. Also, BitMEX is seeking to connect Forex market and crypto innovation through those FX perps. There is a quote coming out of engulfed Daniel, the head of quants at BitMEX. He said BitMEX FX perps are a transparent exchange traded contract which allows FX traders to go along and short as taker or maker, for which we offer a 1 basis point of free rebate, which is unique to the industry. The institutional users FX perps provide an entirely new way to create synthetic crypto pairs to arbitrage, for example, Bitcoin quoted in non-USD currencies. So it's actually rendered by the FX perpetual swap is that it's a form of derivative contract and incorporates merits of futures and spot markets. So all of this is going to be resulting in institutions and individuals being able to trade up with around 50% leverage. As per the announcement, they said one of the key innovations is funding a rate that is paid every 8 hours to help trading prices stay in line with the underlying index price. And the FX perpetual swap allows users to long or short FX pairs, Euro USD or NZD USD, in order to capitalize on price differences in foreign currency markets. So the FX perps on the adventurous or the traders who intend to leverage benefits of derivatives without worrying about expiry dates. So BitMEX actually reached a milestone by hitting a daily trade volume of around $24 million in less than 10 days after being launched in May. Also, class action lawsuits on Coinbase reaches the Supreme Court. So 3 of those class action suits have been filed against Coinbase and the executives as well on Thursday, once they reached the Supreme Court to settle 2 pending class action lawsuits related to scam and Dogecoin sweepstakes. Now, the latest class action lawsuits actually accuse Coinbase of false and misleading statements. So non-disclosure of new bankruptcy risk terms and conditions, violating some security laws, and failing to communicate regulatory and government scrutiny and enforcement actions. Now, Coinbase faces 3 class action lawsuits altogether, and so it is kind of coming up more and more, right? So the lawsuits represent all persons and entities who actually purchased or otherwise acquired Coinbase securities between April 14th, 2021 and July 26th of this year. Moreover, the last date for the plaintiff edition is October the 13th. And in fact, the class action by Robbins, Geller, Rudman, and Dowd already has a plaintiff with a case filed versus Patel versus Coinbase Global Incorporated. Now, and as executives are accused of making false and misleading statements regarding the company's operation and compliance policies. Now, as that was reported earlier, Reddit users have actually raised concerns over Coinbase having a Celsius-like policy that makes consumers' assets become the company's property in case of bankruptcy. Now, lawsuits claim Coinbase failed to disclose risk or regulatory government scrutiny and enforcement action. Not looking good, not looking good. And Brian Armstrong had said, we should have updated our retail terms sooner, and we didn't communicate proactively. When the risk disclosure was added, my deepest apologies and a good learning moment for us as we make future changes. Maybe too late. All right, now crypto exchange is under that trouble because of the SEC and some other lawsuits. So since they are being investigated for listing unregistered securities, while the Coinbase executives actually neglected that as well. And it has partnered with asset manager BlackRock to offer crypto services to its clients. Now, August 4th, Coinbase moved the Supreme Court to settle those 2 class action lawsuits and arbitration after a federal judge in California actually refused cases to be heard in arbitration. All right, that's all I have for you today. Thank you for joining, and be sure to click the bell to get your latest news in crypto.